Good evening, ladies and gentlemen. It's been a week. Oh, yeah, it's time to get a little drinky on and watch the Stock Market Brief Weekly Recap. It's been a minute since I've done one of these, and we got a lot to discuss. We're going to be talking about what's on deck for the market. We're going to talk about market conditions, expected moves around the SPY, the Qs, the IWM. We're going to get into trend analysis. We have some divergence that we want to talk to, some really cool stuff from an intermarket perspective, and we're going to hop into some crypto too as well on today's Stock Market Brief show. Please do me a favor and sponsor today's episode by smashing that thumbs up and leaving a comment. If you subscribe to the channel, put a little smiley face emoji down there in the comments just to let me know so I could say a little thank you for your support. Let's go ahead and get into today's episode. Yes, welcome back, everybody. There are going to be timestamps in the description below for each of these sections that we will be discussing. First, we're going to start off on what's on deck for next week. We've got Fed Chair Powell on Monday. We get some New York Empire manufacturing data. We've got retail sales, building permits, initial jobless claims, and we got some more Fed speak taking place. These are a few two-star type of events. Tier 1, right? Type of events are not on this, Tier 1 events are highlighted in red. Tier 2 is everything that's in bold and black. And then I left the Tier 1 out because it just took up too much space. So we got some stuff going on, but the bigger aspect going into next week is going to be earnings season is really starting to kick off here. So before the open on Monday, we got BlackRock, we got Goldman Sachs, okay? And then we have Bank of America on Tuesday. We got United, ASML, we got Netflix kicking it off there on Thursday, and we got American Express on Friday, amongst many other names that are starting to kick off here going into the beginning of Q3. Oh my goodness, it's been crazy. Let's get into some conditions of the current market. Are we bullish? Are we bearish? Are we neutral? That's what I want to use this section specifically for. And I break down conditions into two elements, really. One, 5-day moving average. That's the 5 DMA. I don't feel like writing it all, but I'm going to. 5 DMA. And then 2 is going to be the flip line. And I'll explain it here on today's episode and give you quite an update. So we're going to start off looking at gamma levels. Now, there's an important aspect going into next week because we actually do have a big option expiration taking place. And I'll show you momentarily. But this level right over here is where traders have been reaching out to. Now that is currently, as it stands in this current moment, and may update coming into next week, 5,700. That level right there is the call wall. So right over here is 5,650, and then we have 5,600. Beneath that is another 50 points lower at 5,550. Now, I want you to just notice this. Under 5,600, this little line, there's not much going on, right? There's not much going on. So this tells me below 5,600, let's be a little cautious. Above 5,600, we're targeting 5,650 and then obviously and 5,700. Now going into next week, we have about 40% as of now gamma that's going to be expiring. That's on July 19th. And then what's really going to allow us to see where people are start positioning after that point. And we're going to have to talk about that obviously when we approach that specific date. So if we look at the chart, okay, of the SPX, today was an important day, right? We had PPI, right? First we had CPI, went down, everyone's all crazy, but we pulled right into an inclining 5-day moving average, okay? Then we broke this little inverse head and shoulder pattern, whatever you want to call it, and we started moving up. Now, the 0-day level that started getting into focus into the day was 5,650. Now, I'm showing you this on Thinkorswim right now. Sometimes I use TradingView's SPX chart, and I use it through a Wanda, but I'm using this right now, and I'm drawing them manually because I'm having a problem exporting these levels. You can use either chart. It's fine. You got to give it degrees of freedom. They're about 10 points, kind of a difference sort of thing. Okay, so this is S&P 500 SPX on Thinkorswim. You can see we came into 5,650. Okay, 5,650, and then what do? We just kind of pin back and forth, and then we push from that level a little bit later in the day to where? Well, we're pulling back into about 5,600. So this level over here, this 5,600 level, right, is right here on the specific chart. And that's right about where the 5-day moving average is. So if we start getting below that, back to these lows, just be cautious because that opens the door for that flip line, which is at currently 5,550. Okay, so when I look at this chart, we're above a rising 5-day moving average, and it's rising, so that is check for the bulls. The flip line is down here at 55.50, which I'm sure it'll update Monday morning, right? We're above that. Check for the bulls. This means that dealers look to buy the dip and sell the rip. Buy the dip, sell the rip. Okay, these are good market conditions. It's not until we start breaking down the gamma flip line and start to see a declining 5-day moving average where the market can see some potential turbulence. With that said, let's take a look at one extra element as far as conditions go, and that's seasonality. Now, seasonality doesn't hold that high of a weight, in my opinion, but I think it's still important to understand where we can go through seasonal pressure, seasonal bullishness, seasonal neutrality, whatever you want to call it. And as you can see, we're actually aligning pretty well up here. This is NDX seasonality, and you can see we're coming into that middle of July period, which is where we typically get some calmer waters, right? Which is surprising because if you actually look at how many options have been trading, we're way above the year-to-date average on a daily basis just the other day. And we're coming into, the summer doldrums, apparently, where we have just some sideways price action. Besides the point, let's get into some expected move. What is the market expecting for next week, for on Monday, the rest of the month, and the quarter? So let's give you an update there as I take one more sip of my drink. Oh yeah, beautiful. Let's start with the S&P 500. So we're going to use SPY. So if you want to screenshot this or download the chart deck, I think I'm going to post the chart deck in the Discord group. And I may just post it on Patreon there for all members, including the free members. I'll post it there too. But the weekly expected moves, we're looking at a weekly expected move. Upper level is 566.52 and the lower level is 553. Now today, we got outside of the weekly expected move, right? We're outside of the weekly expected move. And then towards the end of the trading session, we came right back in to that. So going into next week, it's just so incredibly important to pay attention to these because this gives us an idea for probabilities as to where risk is based off of not just me putting levels on the screen, but based off of the options market, implied volatility. So for the quarter, 575.93, we haven't hit that. 512.51 is down below us. Okay, this is obviously for the next 3 months. This is what the risk was for the quarter. For the risk for the month, we're already up here now as we come into the middle of July. We've already tagged the upper monthly expected move. Okay, and then going into the next trading session, we have our daily expected moves right here. That's about as much as I'm going to read into that as of now. But what I wanted to call out, if you want to screenshot this or download the chart deck, you can get these levels on your screen. If you take a look at the Qs over here, we have a fairly sizable expected range going into next week. It's about just over $8. So we have a high of about 503.68, a low of 485. Clearly, the Qs are still in an uptrend, and we're trading roughly at about the monthly expected move as it stands. Take a look at the IWM. The IWM in the last 2 trading days saw a nice breakout continuation. We had a continuation today, and we basically tagged and traded around the daily expected move, which is not here on the screen. But what we have here is the expected move for next week. That's in orange and white. Those are the daily expected moves for Monday's trading session. And you can see as it stands in this current moment, right, it's July 12th, we're well outside of the monthly expected move now, and we have yet to tag a quarterly expected move. So one thing to note here is if this is a shooting star and we get some pullback, pay attention to how price responds in and around these lower weekly expected moves, because a pullback like that could potentially set us up as like a flag pattern for a continuation. So that could be a possibility, but I think we need to get a little bit more intricate. So we'll talk about the trends. We're going to start off with the SPY, then go to the Qs, and then talk about the IWM. So first and foremost, we are in an uptrend, right? So in the shorter time frame, part of the market conditions is what we see, the 5-day moving average, right? That's purple line. On the 15-minute time frame, that's a 130 period moving average. That roughly equals the 5-day moving average. You can see clearer the daily expected moves going into Monday and our monthly expected move, how we pulled back into that towards the end of the closing day. Now, as it stands in this current moment, what is the trend? We have a high, a higher high, a higher high, and a higher high. We have a low, we have a higher low, and we have a higher low. So as it stands in this current moment, this very short term, this low is holding, right? This high is the last high. So if price breaks this low, maybe even bounces up like this, and establishes a lower high and then breaks down to a lower low, that would be the starting point of a potential change in trend. Okay, but as it stands right now, we are still in an uptrend. Now, if we start breaking down to the lower weekly expected move, pay attention to the July low anchored volume weighted average price. You can see that we haven't really tested it pretty much all, the entire month. This was July 1st, okay, and we basically, we're right around there going into July 2, the 2nd, and you can see we've ripped up and we have yet to test it. So if price comes down into these ranges, you don't just buy at it, but if you start to see some strength after that point, that could potentially create an opportunity for a little bounce play. But just be made aware that if it does crack this low, and even if it comes down there and you get a little bounce, right? If there's an established lower high and a lower low, we could be in a period where the 5-day moving average is going to flatten out to potentially turn down. That's not the case now, but you need to anticipate the possibilities of short-term changes in trend. All right. Now the Qs. Now this is a good example of what I was just talking about there. The Qs, let's take a look at its trend. We have a high. We have a high and we have a high. These are higher highs. Okay. However, what just recently happened? We have a high, and then right here could be a potential lower high as we push price back down. Now, what's the 5-day moving average doing? The 5-day moving average is starting to flatten out. On yesterday's market brief, we said what? The day ended right here, right? Well, let me draw this in. The day ended right here, okay? What do we say? The 5-day moving average was still inclining. Price is below it. So the price action, right, it's bearish, but it's with caution. Why? Because the trend is still up, and if we got back above or broke above, we can see a potential retest of the 5-day moving average. The week to date, there was a bunch of different confluence there, and you could see we backed off a little bit, we went up, and then we pulled back down, okay? So as it stands right now, if this low is taken out, right, this on Monday's daily expected move, it opens the door for this lower weekly, and if this lower high holds, right? Lower high holds, and we start breaking down and creating lower lows, lower highs, that could identify a potential change in trend in the Qs. But as it stands now, the 5-day moving average, it's starting to flatten out. We're getting, now a lower high, but we have not had that lower low yet. Okay, so obviously the mega cap space, the Qs, they've been on a big run. Now we're starting to see a subtle change here in the Qs. IWM. IWM has obviously just been straight up for the last couple of days here. And I just wanted to point out, okay, very quickly, the trend is up right here in the short term, right? The 5-day moving average, but it's pretty extended. So one thing that you can do is apply an anchored volume weighted average price to where we gapped up. You can see actually price ran up to the month to date expected move. We pulled from that point into that gap up anchor volume weighted average price, and we started moving up from that level. We gapped up and followed through, and you can see if you establish an anchored volume weighted average price to this high, it's actually currently holding. So as it stands right now, these last 2 days are just trading within this current range here. So if price comes down, see if this will hold. If it doesn't and it breaks down, this is that lower weekly expected move. And if it does come into that, watch the 5-day moving average to act as potential confluence to see if we talk, like we said on the daily time frame, if it's going to flag out and consolidate a little bit longer. But as it stands right now, we have a low, a higher low, a higher low, a higher low in this current moment, right? So, and then a high, a lower high, very in the short term. So we'll continue to watch this and see how this one digests to create potential opportunities for some follow through. Now let's take a look at a couple of divergences. Now I'm going to just stick to the RSI because I can find divergences if I look hard everywhere, right? But the RSI is a popular indicator, and this really just tells us that, price action potentially, we're talking negative divergences, price action's heading higher, but yet the internals or the indicator itself, the relative strength index, the RSI, is getting weaker. I'm going to start with the weekly time frame. Now, the weekly time frame on the S&P 500, we've seen divergences play out before to the downside. Divergence to the downside, we've even seen positive divergences played to the upside. And as it stands in this current moment, we do have a high and a lower high. This doesn't mean that we can't break this divergence, but we do have a high and a lower high in this current moment as price action's putting in a higher high. Okay, so we've seen this parabolic move, very sharp pullback, parabolic move right back up, and we're getting kind of extended from the 40-week, which is roughly the 200-day moving average, okay? And then on the price momentum oscillator, that's also flat. So Is getting a little frothy as we move into a period of seasonality where things kind of flatten out and we're going to consolidate a little bit, flag out maybe, pull back, pull in. That's a possibility, and we need to keep that in our back pocket. NASDAQ 100 also has been on a very strong move with a negative divergence there on the daily time frame, and we've seen divergences play out before to the downside, right here, boom, to the downside, and even right here to the downside as well. And you can see the price momentum oscillator here. It's still bullish, but it is starting to kind of flatten out here, so potentially watch for a crossover there. And then semiconductors is quite very like obvious here. We have a high and a much lower high, a high and a higher high here. Today, price action was up 1.27%, but it was just an inside trading candle. The prior trading day was a bearish engulfing candle with strong volume. We've seen this before, a bearish engulfing candle with strong volume. It led to consolidations. Okay, more recently, it was right here. That was a high volume day where we gapped up, closed lower, and it led to consolidations. Okay, so are we in it for semiconductors to potentially consolidate more? I know people want to call this a double top. It's not a double top as it stands, but if we do crack under 255, that would be considered then a double top, which a measured move would take us probably down to around 230, 235, but it's just not there yet. Go into the intermarket stuff as we take it one more time, another sip of the drink. I'm drinking a Lagunitas Island Beats Tropical IPA. Refreshing, juicy citrus notes. Okay, so let's talk about some intermarket charts here. I want to start off with silver and the miners because I think there's an opportunity here. I talked about it in last video, but I didn't really explain it. So let me tell you why I think that there's a good little opportunity here for people that like to be tactical, that like to be tactical. Now, first and foremost, if you take a look at silver up here and gold miners down here, this is the GDX. This is silver. Look at the correlation. This is a 20-day correlation. Most of the time, it's above the zero line. Actually, looking back on this entire chart right here so far, it's above zero, which means what? There's a positive correlation. So if you pay attention to both these at the same time, you're like, wow, they move hand in hand. And you would be right? They do move hand in hand. Today, silver was down 1.61%. Honestly, it looks like it's just consolidating and looks like it can break out. So be aware of that. Go about what I'm about to say here. But if you take a look here, this was down and the gold miners ended up, they gapped down, but they ended up closing higher on the day. So they are starting to diverge a little bit. And sometimes when this happens, if you look back to the history, when silver identifies a lower high, but the miners actually put in a higher high, we've actually seen the miners see some weakness. So you see right here, they saw some weakness, and you've seen it currently right here. And what I like about this specific setup is this has been straight up for a few trading sessions while this has been flatlining. Okay, and if silver comes off here or consolidates more, that could potentially put pressure on miners given the context of its positive correlation, which means that the gold miners may be a potential good shorting opportunity if you are tactical enough to do so. Because remember, the trend is actually up in this time. So the way that I approach it is I bought some DUST, a little bit of DUST. And I want to remind you, people, okay, this is very clear because the reason why I never really tell people when I get into trades or how I get into trades, I usually just show them the setups that are there. It's because if I do, people, they'll look at a win rate, and if I go on a long winning streak, which this last couple of weeks, we've been just nailing them out of the park, right, on these setups. So people get the false assumption that this is always how it is. So when he posts something, I'm going to just go long and I'm going to go full bore. That's not what I do, okay? That's not what I do. Right now, the market's been working in favor for breakout traders, for swing traders. Very, very good. Because of what? Because the market conditions are there for it, okay? So what I'm trying to get to the point is you can have, right, 9 out of 10 right in a row, and people are going to think, oh my goodness, that's so great. I'm going to just do every single trade he does. But the next one he puts on, I'm going to just do a little bit bigger in size. When I short, okay, I'm going to be very specific. When I short the market, it is much smaller size, and I am in and out a lot quicker than most, right? So be aware of that. And another thing to just add to this subject is there's going to be times where I can only get 3 out of 10 trades right. But the point here is those 7 losers, I don't know why I drive a 7 like that. Those 7 losers, they're going to be cut off very quickly. And I'm only going to have those trades if they make sense from a technical perspective. Okay. I cut my losers quick and I try to catch a move with volatility in my side or at my back, wind at my back, where the trade goes in my favor. Okay. Let's continue on. So we talked about silver, right? Silver, miners, how they're kind of diverging here, and it could be potential pullback. Another element to this is to look at something from an intramarket standpoint, and that is the dollar. And the dollar's been coming off pretty hard and fast here. And typically when you have a falling dollar, that's good for gold. Gold's been holding up rather well. I just wanted to point out here too, if you look at the correlation between silver and the dollar, the 20-day correlation, it's typically in negative. Now, this one kind of rotates in and out, but right now there's a 20-day correlation of being negative. So if the dollar bounces from this kind of move to the downside, perhaps that does put a little bit more pressure on silver to consolidate or, move sideways a little bit longer. Now, can the dollar potentially bounce? Well, I'm looking over here at this specific indicator, the bridge bands, which are the zones document. I'll have those updated this weekend on the Discord channel to give you a better visual. But you can see here, we are at the lower band here. Now, it is falling lower, so it's going to update, probably come the market open and drop lower, okay? Which may mean the dollar can come in. But I just wanted to call out that we've been at the lows before, right? And you can see bounces take place in the dollar from these low readings. So if the dollar does want to bounce and the negative correlation holds, that means that we could potentially see silver pull in. And if that is the case, perhaps that means if this correlation between silver and miners holds, silver miners can come in a little bit here, consolidate, maybe make a quick gain. I don't have the chart of dust up, but it doesn't take much to make a few percentage points on a little bit of a pullback here or a little bit of a breather in the miner space. Overall, as I'm talking about this, the silver chart, once again, it don't look that bearish, right? We're having a series of higher lows, higher highs. I'm just trying to get very tactical here, show you some interesting stuff that I do see taking place. Let's take a look at the 10-year yield and oil. Now, oil has been consolidating here sideways, and you can actually see very, interestingly enough, the black line, that's oil, okay? And you can see sometimes it actually almost gives us an indication of what the 10-year yield may do. So, for example, oil started falling, and then a little shortly thereafter, the 10-year yield, which is the candles, the green and red candles, started following after. Then oil found a bottom, and then shortly thereafter, the 10-year yield actually found a bottom. More recently, oil started falling from April, and then the 10-year yield shortly thereafter started following its path. Oil started finding a bounce. Shortly thereafter, the 10-year yield started finding a bounce. Now, I know there's a lot of macro data that can shake things up. We saw that this week, and the 10-year yield backed off a bit. But I just wanted to call out oil's actually consolidating here and holding up rather well. So is this just an overreaction to the 10-year yield? Or is the 10-year yield going to slow down and start to potentially bounce? I think that that's an important aspect in all of this. And the reason why I'm bringing up the dollar and the 10-year yield is because if you just look here from a week-to-date performance perspective, what do you see in red and what do you see in green? Very quick, the 10-year yield and the dollar, okay? The dollar was red, the 10-year yield was red, and pretty much across the board was green. So one might think that if the dollar sees a bounce next week, if the 10-year yield sees a bounce next week, that can put pressure back on the potential markets and various other assets. Is that how it's always going to be? No, it's just something that I wanted to call out and point out what just previously took place this week, and that has been taking place previously as well. Okay, we're going to talk about some crypto now. I'm going to go over some charts fairly quickly. First, I want to start off with the Sailor to Shift tool. This tool right here is something that I put together quite some time ago, and it's measuring the rate of change between Bitcoin and gold to establish a sell signal, a buy signal, or a buy trigger and a sell trigger. Okay, so there's a couple aspects to this, but everything that's highlighted on the screen, the green and red lines, are indicating when the trigger actually took place, because there's always going to be a signal, and then after the signal, you have to get the trigger. Okay, so for example, we saw the green signal and trigger take place. Boom, we saw a big run up. Every red line is the sell trigger, and what you'll notice is it's caught in every big drop that Bitcoin has seen. Now, it's also caught in whipsaws. For example, this whipsaw right here led to a sell-off, or sorry, it was a quick little sell-off there, but right back to a buy signal that led to another rally. The reason why I'm calling this out now is because the rate of change made a pretty significant drop, and it had that significant, the sell signal and the sell trigger, and we saw that move to the downside, and we're having an inside trading week now. If this signal starts to turn back up and go into positive, that would be the buy signal, buy trigger, and that's where I'd look to start going long, obviously Bitcoin, potentially Ethereum, and potentially crypto equities again. But sometimes people want to do things differently. They don't want to use a 4-week rate of change. They want to use a 3-week or a 2-week or use it on the daily, whatever the case may be. So we can look at the technical perspective right now of a Bitcoin chart. Okay, so if I look at this right now, some might call this a potential, a golden arches, double top sort of thing, right? Where this was the neckline, you had the high, the matching highs basically, and then we cracked down and we're kind of forming this bear flag in and around this area. I'd say really the area to watch here is probably around 60,000, maybe even a little bit higher. Honestly, it's like 62 to 64. This kind of zone in this range, I know it's kind of a big range here, about a $4,000 range, but you can see that it's held as support, and it chops around a lot of volume here. And then when we broke down, we back tested and pushed down from it. Now, I know that there's a lot of narratives and news about why there's the distribution taking place with Mt. Gox. I know that there was stuff going on in Germany too, just distributing Bitcoin as well. And that may have what's caused, the signal and the trigger led up and told us that, hey, there might be something to happen. Now, as it stands, we're just coiling up here. So be aware, right? Bitcoin relative to the S&P 500 crossed down through the 50-day moving average, and it's kind of flatlined here too as well. So you just got to be open to the fact that if this is actually a double top and it actually has a measured move, which I'm not saying this is going to be the case, but that can take us down to around 40,000, right around roughly those areas. That would be a technical measured move. I'm not calling for that, but you got to be open to open to it on, especially when you have these sell signals, sell triggers. Ethereum also saw some weakness pulling back into these prior lows here, but overall, what are we seeing? We're just seeing kind of like a range, and it's pulled to the lower part of the range, and now it's kind of flagging here too. So once again, I'm just waiting for the buy signal, buy trigger. Now, there are some crypto equities that I wanted to jump into because we're seeing weakness in Bitcoin and Ethereum, but there's some of the crypto equities, they're just going flat. So for example, Mara saw some strength today. It was up 9.2%, and we have a couple of days of good volume. So this pullback here happened to be on low and light volume. You see this prior day over here was good volume, and even over here, you're seeing pockets of strong volume, which makes me think, man, if these things break out of the ranges, especially if we get a buy signal, buy trigger on the Sailor to Ship tool, this opens the door for higher moves. And when I look at it, I'm like, well, if it breaks down like through 19, yeah, that could be your risk level, and watch out. If it turns back around, maybe we'll see how it sets up, but it's pulling in and giving us decent risk versus reward setups in these crypto equities. You can look at something like CLSK, CleanSpark, and this thing, I mean, let's be fair, you're putting in lower highs. Maybe this was a higher high. It's kind of like matching. It's kind of stair-stepping down lower highs and it's holding this 15 area. But needless to say, if it can hold 15, I mean, you're talking this little range of risk here. And if it bounces back up to the 20s, I mean, that's a lot. That's a big move. These are high beta names. So you got to be very, very well-versed on position sizing here. Because if it starts breaking down and you're like, oh, no, come back, and it starts dropping off, comes to fill a gap here at 10, right? From $16 to $10, that's a very large percentage point fall. Okay, but what I'm pointing out here right now is it's holding 15. It's held 15 a few times, and we've seen some nice bounces from that level. Riot is another one, just in a very tight trading range here. We're seeing a couple good volume days in this range. So if we start popping out of it, maybe that opens the door for a run to 11 or potentially even 12 there. And if it breaks down, we'll just watch out. MicroStrategy is not showing much. We're seeing lower highs, but I guess you can say also that we're coiling up here on MicroStrategy as well. And then CIFR, Cipher Mining. I just thought this was interesting. I'm not familiar with these names by any means, so don't ask me about fundamentals on this stuff. But it is getting very tight here as well, and volume's drying up pretty nicely there too as well, as we've seen on this prior move up, some decent volume running up to that point. So this is getting fairly tight and might be worth noticing. If you just look at this trend here, right, this kind of trend, you're seeing higher lows, somewhat lower highs, and it's just coiling up to this kind of apex right there. And then the last one I'll talk about is Coinbase. This is obviously a much more well-known, and you can just see here too as well, price action is getting very, very tight. Now, this doesn't mean that it's going to go up, up, and away. It's just letting me know that there's probably going to be a significant move in these type of names, probably very soon, because what? Because one of the basic principles of technical analysis is that stocks, assets, commodities, whatever the case may be, markets, they move between periods of contraction, then expansion. We talked about IWM, right? That's exactly what IWM did. It looked like this and then exploded to the upside. But remember, you got to be open to the possibility of it exploding to the downside and respecting it. But once again, what I like so much about this stuff is the risk becomes so tight and so small. So when I put on a position and if it goes in my favor, yes, I can make good money with small risk. And if it goes against me, I lose a little money, I get out, and I look to see if it sets up again later. And that's it. That's all I got for you on today's market brief, everybody. Hope it helped out. See you later.